Well, he's one of the world's savviest investors. He travels the globe looking for investment opportunities, sometimes on a motorcycle. He's Jim Rogers, chairman of Rogers Holdings and author of Adventure Capitalist, The Ultimate Road Trip. A former business partner of George Soros before retiring at the age of 37, Jim Rogers is a popular financial commentator and a self-described currency and commodity trader. And he joins us from London. Well, thank you very much for joining us today. It's a pleasure to have you.
I am delighted to be here, Andrea. It's nice to see you.
Great. Well, we wanted to start off, as you call yourself a currency and commodity guy, I wanted to start off with the whole issue of what's happening between China and the United States on the currency front. And basically the issue that, there's a lot of political pressure rising now in the U.S. for the U.S. to brand China a currency manipulator. Is the U.S. going about this the right way, or do they just have no choice and they have to do something?
Well, Andrea, as you well know, throughout history, if you slap somebody in the face, and they're going to, take a defensive attitude because they got to save face, if you will. So I don't know why the U.S. is doing all this in public. That rarely works, especially with Asians. So it seems that maybe they have to use your terms, but I would think there's a better way. If we start having trade wars, Andrea, that's the end of the whole game. Nobody has ever won a trade war. And trade wars wind up disastrous for everybody concerned.
So Jim, how do you think the rest of the world should go about persuading China to revalue its currency?
Well, I would try to explain to the Chinese that it's good for China if their currency is allowed to float. Right now, all that money is trapped in China, and they have various bubbles developing. It always happens when money cannot escape an economy, and there's a lot of money floating around, sloshing around. Right now, they have, apparently, in my mind, real estate bubbles developing in many urban cities. And, of course, if the currency goes higher, then everything they import is cheaper. And that's good for China and good for the Chinese. I mean, if they import cotton, the price of cotton will be cheaper if they let their currency float and it rises. So I would take that approach to try to show the Chinese that they would be better off if they let their currency float, and then nobody could accuse them of manipulating the currency because the market would be setting the value, not the government.
But I'm assuming that the U.S. has been trying to do this through backdoor channels for quite some time, and it seems to have been to little effect.
Well, I agree. That seems to be the case. I'm not sure where the Europeans stand in all of this. I know the Europeans would like the currency to float too. It would seem to me that somehow or another, that if people sat down around a quiet table and tried to sort this out, it's obviously just cannot be the U.S. It's got to be everybody, to make sure the Chinese understand that they've got to let their currency float. The Chinese know this, by the way, Andrea. They know that they can never be a great international economy unless their currency floats. You can't have a blocked currency and be a major player on the world stage. They know that. They've let their currency rise some in the last 2 or 3 years. And in fact, as you know, it's rising against the euro. It's rising against several currencies as we speak, or it has risen. And so it's making some progress, but not enough for the Americans.
But what do you make of the fact that the Chinese are arguing that they're being scapegoated here, that the pressure by the U.S. is a form of trade protectionism? Is that a fair argument?
Well, back to what I said before, when you slap somebody in the face in public, he's going to have to do something to save face, and that's what they're coming up with and saying. I think everybody's being protectionist these days. The U.S. is unfortunately, back in the 30s, the U.S. started protectionism. It spread around the world, and we had the Great Depression. Unfortunately, we're having the same thing happen again. The U.S. has started protectionism, and then everybody else has joined in, and everybody now says, well, the Americans are doing it, so we can do it too. As you know, the Americans wouldn't let people buy Union Oil of California, wouldn't let people buy 3Com. They told the Dubai ports they couldn't do business in the U.S. I mean, this has been terrible for the world, and other people are now copying. So we have protectionism developing, not everywhere, not in Canada, but certainly in many other places.
Jim, do you foresee a time when the Chinese currency could be the reserve currency of the world?
I do, Howard. I don't see anything else on the horizon. I'm looking for something to replace the U.S. dollar, not because I want it, because, the U.S. is dollar is a terribly flawed currency. I don't think the euro can do it. Obviously, the yen cannot do it. The Canadian dollar cannot do it. Whenever I speak to people, I tell them the Canadian dollar is one of the soundest currencies in the world on the fundamental basis.
Do you buy it?
But the world cannot use the Canadian.
Do you own it, the Canadian dollar?
Yes, of course I do. The Canadian dollar cannot become the world's reserve currency. It's not big enough. So the world needs something, and as I look out over the next 10 or 20 years, the only possible replacement that I can see or competitor is the renminbi. It's a huge economy, a huge population, huge reserves. Has a lot of things going for it. So if and when it's convertible, it may be the ultimate source.
Okay, I just wanted to follow up with the Canadian dollar because, as you probably know, it's seen gains almost every day for the last 2 weeks. It's being described as investors are having a love affair with the loonie, as they call it. Do you see this continued rise in the dollar, and are you going to be backing it in the for the near future, so to speak?
Well, I've owned the Canadian dollar for some time. This is not a new love affair with me. I've been in love with the Canadian dollar and the Canadian economy for a long time. I expect it to go much higher. If you have to buy a currency in North America, obviously the loonie is the only thing to buy, if you ask me. Now, I also own the U.S. dollar, and I have for a few months. But that's only as a short-term or medium-term trading kind of thing. I have owned the loonie for years, and I expect to own it for many more years. And look, the Canadian economy, the Canadian currency is one of the soundest in the world on a fundamental basis as we speak in 2010.
Just back to China, Jim, you mentioned the real estate bubble there. If it pops, could it infect the Chinese economy as the housing market did in the United States?
Well, of course it will have an effect, but it's mainly in China. If you ask me, it's mainly going to be a lot of real estate speculators who are going to go broke. It's not like here where people were buying, like in the U.S., where people were buying 3, 4, and 5 houses with no money down and no job. That sort of excess is not going on. The excess there is one of price, not so much one of credit. If you buy a house in China, you have to put up a huge down payment, and it's not the excess that it was in the U.S., and there are many, many other phases of the Chinese economy which are going to do well, even if a lot of real estate speculators in Shanghai go bankrupt.
So when people talk about some of the similarities between the rise of Japan and they compare that to the rise in China, would you say that, and then of course Japan seeing its economy fizzle for more than the last decade, is the rise of China then fundamentally different, would you say, and is it based on something more substantial?